Today we have another question for my A-level accounting students. We can see the question on the left hand side of our screen, and on the right hand side we've got all the workings which I'll go through and explain step by step. In this question we are dealing with non-current assets and the effect of an error on the profit. So let's begin. The financial year of a business ends on 31 December. At the beginning of the financial year, the following payments were made in respect of a new machine. So in the table, we're given the purchase price of $60,000 and the installation costs of $10,000. It was discovered that this installation cost had been incorrectly treated as an expense. It is the policy of the business to depreciate machinery at 20% per annum using the straight line method. What was the effect of this error on the profit for the year ended 31 December? So always know that the total cost of an asset is calculated by adding all the costs which are required or incurred to prepare the asset for its intended use. The key word here is intended. Now obviously, without installing the machine, you wouldn't be able to use the machine at all, right? So that is definitely necessary to prepare the asset for its main purpose in the business, okay? Therefore, the total cost of an asset in this case is derived by simply adding $60,000 with $10,000, which gives us $70,000. Now, the correct depreciation using the straight line method in this case is 20% multiplied on this total cost of $70,000, which would have been $14,000. But the question clearly specifies that the installation cost was incorrectly treated as an expense. Therefore, the cost of the asset was incorrectly recorded at $60,000, which means any relevant depreciation expense derived would have also been incorrect. And that incorrect depreciation is 20% of $60,000, which is $12,000, okay? Now, comparing the incorrect depreciation with the correct depreciation, we can understand that expenses are understated by $2,000, right? So when expenses are understated, profit must be overstated by $2,000 due to the inverse relationship obviously between profit and expenses. Now, most students, if this wasn't a multiple choice question, but rather a question without these options provided, would have forgotten to check the installation cost as well. So what's happening with the installation cost? The installation cost incorrectly has been expensed, okay, for $10,000. So obviously expenses have increased by $10,000, which led to the profit decreasing by $10,000, okay? So here we have two different errors. First of all, profit was overstated by $2,000 due to the incorrect depreciation, and then due to the incorrect expense of installation costs, the profit was understated by $10,000. So doesn't that mean the net effect of error on the profit is that it is understated by $8,000, because we have got overstated $2,000 here and understated $10,000 here, which offsets the overstated amount of $2,000 and ultimately leaves us with an understated amount for profit of $8,000. So on that basis, the correct option would be to select option B.